Alright guys, what's going on? This is Ryan, aka Kenner & Clark with BlockRoots. And in this video, I want to do a short feature on this platform that we're looking at right here. Alright, so as many of you are likely already familiar with at this point, my bread and butter is order flow analysis. It's what I came to crypto with, and I was surprised when I started trading Bitcoin that no one else was using this, but I realized that the market is so immature that the methods for trading reflect that in a way. Okay, there's a lot of TA 101 that is used. All right, and this has yielded plenty of success for many traders who have started with this and just kept on maintaining it because there is a large behavioral element to trading crypto. Since it's so retail driven, there's a huge feedback loop for the dominant methods of trading, because if other people are acting based on those signals, you're going to see price respond a certain way consistently. But I think that as the market evolves, there's no way you're going to get away without using some more advanced and sophisticated method of trading. Okay, so that being said, there are plenty of times when I make videos and I'm talking in terms that are completely frequent to me and I've been using for the last 10 years, all right, and I could be speaking over people's heads. So what I want to do is find things that can help beginners, okay, dip their toes in volumetric based analysis or order flow analysis, so that they can begin to look at the market with more of a magnifying glass and to identify maybe some of the certain turning points before they ultimately are reflected in price action, so that they might have an edge. Okay, now price action traders, forex traders, okay, they've come to crypto and they've had a tremendous amount of success, and they don't focus on volume, and it's for good reason. In forex, there's such a huge turnover. All right, you're not, as a retail trader, going to really be able to recognize any type of difference in volume from one level to the next. All right, it's not going to be something that is very useful. All right, there's no concept of an order book. Okay, you're not going to be looking at how many buyers were aggressively lifting the offer versus sellers hitting the bid. Okay, so this is left out. Okay, and because of that, they've become extremely adept at just price action trading. But as I said, this market is very volume driven. Okay, there is a certain limit to market order ratio that exists in this market. I would say that it's probably similar to crude. So we have to be paying attention to the feedback that we get at the lower level, because it can help us, as I said before in other videos, identify the heavier hand versus the weaker hand. Okay, so identifying the strength in the limit order versus the strength in the market orders, okay, or the aggressive order flow. So order flow analysis is an incredible to identify, rather be to have a basis or a strong understanding of order flow. It is very useful for scalping. Okay, it's very useful for the lower time frames. It's also very useful on the higher time frames. Again, if we're trying to identify absorption, okay, or those divergences in delta, okay, cumulative volume delta, so that we can identify maybe where there is a hidden limit wall, okay, absorbing buyers, or hidden limit wall absorbing sellers, okay, at major levels. So you do need to have an understanding of where these levels are to begin with. You do have to have an understanding of basic TA so that you can map out the terrain initially, so you could see maybe areas where we would expect this to occur, so that we know where to look. Now, as I said, all right, there's many times when I talk over everyone's head. So this platform right here, I think, is the perfect tool for an introduction to volumetric based trading. Okay, has all the things that we need, and it gives you that visual feedback, so you don't need to be looking at the the finer data, all right, at a more atomized level. Now, if you're a scalper, okay, you might look at the beginning of a range, and you're trying to identify whether you should be fading the high or in case buying what might be the beginning of the breakout of that high. Okay, and if you're trading based on price action, you're going to get feedback in how certain patterns occur and how candles are developed around these levels. But again, you're leaving out a major component. So Cignals, okay, what it does is it basically has a few different things. Okay, it has a constantly updating volume profile. All right, on the right hand side, you can see the really light portions are where the dominant volume took place. Okay, and then the darker portions are where volume drops off. And then you can see that as the profile is built, it shows us where these distributions are mainly occurring, or rather where this where the battle is occurring, and you can see that based on where we're looking right now, it's clear that most of the volume is in this area right here. All right, it's also going to show you, all right, what we're looking at right now, okay, is selling volume in red, okay, buying volume in green. Now on other platforms it might be switched so that the buying volume is on the right, okay, and the selling volume is on the left, and that'll be because, you know, we think of green on the right, buyers lifting the offer and sellers hitting the bid. But with each one of these candles, all right, the color is the buying volume on the left hand side and the selling volume on the right hand side. Okay, and the gradient is going to be shaded based on the amount of volume that took place. So these darker, or rather these brighter areas, all right, are going to be where most of the volume took place. All right, and the areas where it begins to fade out, that's maybe where the volume starts to thin out. Now, these lines that you're seeing within some of these boxes, those are where your imbalances are. And you can adjust these settings, okay? And right now we have an imbalance of 10. Okay, so a multiple of 10, so it's basically 10 times where 10 times the amount of volume occurred, all right, between buyers and sellers, or maybe where there was 10 times the amount of selling versus buying, or maybe 10 times the amount of buying versus selling. So right here, okay, within this candle, we can see that it's majority on the right-hand side. It's all the way down, so there's tremendous selling imbalances. Okay, and if you were to look at a footprint chart or zoom in, because you can actually see this if you zoom in, you'd see that there was a lot of aggressive selling right here. All right, and then what we have is a few other features. Okay, if you click on the chart, you're going to see the overall delta between the levels. So between these levels, okay, what we'll have is the difference between aggressive buyers and aggressive sellers. Okay, and if you see a green box, all right, it means that there were more aggressive buyers than there were aggressive sellers. All right, and then it's going to be colored again with relation to how much volume actually took place. So the lighter the box is, the lower the volume that occurred. All right, so the really bright green, okay, was where there was a lot of aggressive buying. The really bright red was where there was a lot of aggressive selling. Okay, and there was a net positive amount of sellers versus buyers. So this is useful because what we can see at certain lows and at certain highs is when there is a bright red, okay, followed by a light red, or bright green followed by a light green. All right, this is an area where there potentially may be trap sellers or trap buyers, and if the market reverses from this point, you're going to be squeezing these participants. All right, especially when these occur at extremes. All right, if we click again, what we'll see is just volumetric data. So it doesn't show buyers at the offer, okay, it doesn't show sellers hitting the bid. What it just shows is where a majority of the volume took place. All right, at the bottom, this is going to be your delta. So your cumulative volume delta over the course of time, and this is going to be useful to scalpers, okay? We also have a sigma reader on the bottom right. So this will show how aggressive that offer is being lifted, okay, or how much weight is hitting the offer, or if it's negative, it'll show how much weight is hitting the bid. So again, at certain supports or resistances, this is going to be a key piece of information that we're going to want to be paying attention to. So for example, all right, if we were looking at this move upward right here, all right, you know, without any type of feedback in terms of volume, we might assume that this was the beginning of a breakout further upward, okay, a retest of these highs. But when you're looking at the actual volume feedback, okay, or looking at something like delta, what you can see is that as we move up, the aggressive buyers were beginning to step off the throttle. All right. Not only that, as you moved up, all right, there wasn't really any weight hitting the offer. So we see the delta decreasing. All right, we see price action increasing, and in any event, what we want to see is delta supporting price action. So we want to see that as price is moving up, all right, buyers are becoming more interested if we are to assume that this level is going to continue upward, or if this level is going to be broken and continue upward. Instead, what we see is prices approaching on decreasing delta an area where there was a previous selling imbalance. Okay, so an area where sellers were very interested in selling aggressively. Okay, so not passive order flow, but actual sellers just dumping into the bid. So these are areas where we can expect price to come back to, and if not supported by any volume, all right, or in this case, if we're considering when price is auctioning upward, if price is having a decreased amount of buying activity, as price is auctioning upward, all right, we could expect price to reverse at this point. So what do we get? We get this combination of both of these feedbacks, all right, or rather, we get the combination of this decreasing delta, all right, and approaching an area where we had a large imbalance. And again, this imbalance is based on a multiple of 10, so 1,000%, all right. So these are areas that we can identify when we're looking at a volumetric based tool like this, all right. So we can see, okay, we are approaching, the buyers are basically stepping off the throttle, all right. We're approaching an area where sellers were very interested in selling, okay. And again, what happens? Price drops off. So this is the type of information we want to be able to have access to that you're not going to get on just looking at a composite chart. So if you've watched any of our videos on auction market theory, if you're a member of BlockRoots, you'll know what we talk about when we're talking about how price will move through, or rather rotate through a range, for example. And as we approach the high, okay, as we get away from value, all right, we'll typically see buyers become less interested, all right, if this level is going to be respected, and sellers start to show up a little bit more, all right. The same thing can be said as we're auctioning lower at an area where we might expect some type of absorption. We'll start to see sellers become less interested and buyers begin to step in. All right, now we're trading the lower time frames. Being able to identify this as it occurs, okay, can help us get in position. And in this case, instead of buying and longing at the top here, assuming that this is going to be continuation, we could see that we're not going to be on, or we're not going to be having any other buyer support, all right? Because what we're seeing in something like Delta, all right, and what we're seeing in something like, you know, this Sigma tool here, is that as we approach this high, buyers are becoming less interested, and there isn't really much weight lifting the offer, okay? So we want to be positioned with the dominant order flow. All right, we don't want to be one of the smaller hands right now trying to, like I said many times before, hold back the tide. So this type of platform is great because it really makes these things visually obvious. All right, so we could see where the dominant volume took place. All right, we could see the coloration. All right, where there was aggressive buyers versus aggressive sellers. We see these areas where there wasn't much volume. All right, where buyers were less interested, okay, where sellers were less interested, all right, and then these imbalances as well, okay. This tool along the bottom is great, all right, if you're trying to identify areas where we might find a range being respected, okay. At the lows, what would we normally see? We would see that sellers begin to taper off. At the highs, we would see that buyers would begin to taper off, all right. You can see that, for example, we're looking at this range down here. As we approach this high up here where there is a good amount of volume, if you change this, you'll see that there's a lot of volume up here. As we rotate upwards, all right, off of this low, what do we see again? We see this delta beginning to drop off towards the top of this rotation. So this is the type of information, again, that you can only get when you're looking at a volumetric based platform. And this is the perfect starter platform, I think. So it's very affordable, all right. We'll be using this from time to time to really not only substantiate our thesis, but to really help you guys learn how this stuff works. So that's that, guys. All right. As always, it's been a pleasure. This is Ryan with BlockRoots. Exercise proper risk management and trade effectively.